Crypto is how our generation learned about finance. Money laundering in crypto is very fast and very cheap. Hackers on average need about 6.5 days to launder your money. We found 11,000 escort girls in Dubai that accept crypto, which is crazy.
Hello and welcome to the first episode of Money Rewired, a fintech podcast with industry professionals about the new rails, the real risks, and how money moves in the modern world. For our first guest, we're starting with a part most people avoid: risk and compliance. It's a great pleasure to have our today's guest, Lex Fisun, co-founder and CEO of Global Ledger, expert in compliance, risk monitoring, and investigations. So, Lex, thanks for joining us. How are you today?
Very good.
Awesome. So I know you were in Brussels recently with GBBC, and maybe you can tell us a little about that. Let me set some context why I'm asking, because I also talk a lot about with like banks and more like traditional financial institutions about crypto, and they are confused. So I just wanted to know, what's your outlook at that? How confused are the policymakers? What do they understand or misunderstand about the crypto risk, and what do they get surprisingly right?
Look, what I think is the current situation is way better than we ever had. And this is true. Back in the day, I remember I was approached by a law enforcement. They busted a credit cards marketplace, and they seized mining equipment. They came to me and they're like, you know, we don't know what that is, but people say it's downloading money from the internet. And now it's way better. And especially I think all these laws like MiCA or Genius Act or other legislations that were passed during this year in particular, they did a lot of categorization and they did a lot of vocabulary synchronization between TradFi and crypto. And in that sense, during the passage of those laws, people learn those laws. People also they request consultations with even companies like Global Ledger. And this is a very rare opportunity where we can educate them and they can educate themselves in terms of what crypto is, what types of crypto are, what are their differences, and things like that. And what we see now is passing those laws, even a very simple thing like that, is a very important exercise for people to really understand what is going on with all these new technologies, how they evolve, what are the latest possibilities, what things could be regulated, what's not, and things like that. Yeah.
That's good to hear. Do they actually see you as, the odd one, or do they see you as a peer in a way? Because again, speaking from visiting banking conferences, I see that it's more and more we're seen as actually someone from financial infrastructure, not just some weird people from crypto.
I think you still have a small level of sort of marginalization in a sense, but the volumes speak for themselves, like the volumes of stable coins, the volumes of crypto investments, the volumes of the investment in different funds. So the volumes make you look like a peer, just any crypto person now. My take is in general, crypto is how our generation learned about finance in a sense, right? We didn't know how these banks worked. We didn't know what compliance is before we actually started to reinventing all this. And by reinventing all this, we learned many of these things: how investment work, how funds work, how collaterals work, how securities work, and how currencies work ultimately. Even these simple questions like what is backing US dollar, that people usually ask when being asked like what's backing Bitcoin, is actually a very important question you would probably never ask yourself if you didn't start learning crypto.
The learning through crypto resonates with me a lot. Is EU leaning more towards like enforcement or market growth? Is like the balance sane, in your opinion?
Look, in terms of enforcement, it may look scary, but if you really look into numbers like how much money were seized or blocked or uh, how many court cases are, the numbers are kind of tiny, even compared to the volumes. I mean, we can, for example, just to compare, right? Garantex is the very famous sanctioned exchange, and it had like total volume of Garantex for 2024, just a year before they got closed, was about 16 billion, and 1 billion of that was with licensed entities in the EU. This is all you can see it in the blockchain. And if you think about how much money was seized, I mean, the operation destabilized. It was some money from Garantex or exposure. It was about 25 million. And then there was also money seized from Garantex servers themselves, which was about 20 million. So we speak in 16 billion volume and 20 million seizure. It's uh, it's a good number, but it's not a big in the percentage. In my view, a very good analogy. I don't know if I should say very good analogy about my analogy, but I have an analogy how to describe it, right? So imagine you, the business is this hero, is this knight that is, trying to achieve something, and it has a goal. It's a big treasure, or it's a princess, whatever, and it just on the other side of the valley. And when he enters the valley, the first thing he enters, like as soon as you pick up momentum as a business, you get yourself, as I call them, liquidity parasites. Liquidity parasites are the people that are trying to launder money through you or trying to steal your money. So their goal either to take your money or to give you some sort of dirty funds, and take your clean funds. That's the only goal they have. And the next sort of creature you meet is the regulators. This one I would depict as some sort of a dragon, and the knight somehow, like just the normal behavior of any business, is they try to ignore the parasites, like they don't exist, or they even try to think of it as something positive, and they try to fight the dragon to get to the other side. Where the reality is, if you just take the parasites and feed the dragon with them, you pass, you get the princess. It's all like you are the best friends with the dragon for the rest of your life, and it's
That's a cool metaphor.
yeah, it's all the whole life of the knight becomes very easy, way less risky. You don't need to fight the very big dragon. I mean, you're probably gonna lose, but feeding the dragon with parasites makes life very simple and easy, and makes the fairy tale with a very good happy end.
I can see you have some connection to marketing in ads before, because it's all about storytelling in the end. Yeah,
Yeah,
and you
yeah.
you got your story definitely. Speaking of, like, I guess more edgy topic, the competitors. I mean, you're not a new player in the market, but you're newer, I would say, than some of your competitors that have been like for ages, it seems. So, what are you doing differently? I mean, like, how do you win against the giants?
It's all very simple. I mean, the problems we identified when we started, uh, that look, money laundering in crypto is very fast and very cheap. Like, money got stolen, they can be siphoned, mixed, all of that. We did analysis that hackers on average need about 6.5 days to launder your money. Like 6.5 to 8 days to completely launder, even if it's 1 billion hacked funds and things like that. So uh, in most cases, they laundered, like in I think 1 out of 5 cases, they start laundering before the hacking becomes public. So it's that fast, and they spend on that tiny portions. of the stolen funds on commissions. So money laundering is very fast and very cheap, while compliance tools are slow and expensive. You cannot win in that situation. So our goal is to make cost-effective and fast tools. And if you compare us with competitors, in most cases, this would be a slow and expensive tool.
I see. So basically, the downside of giants is actually that they are big, too big to be efficient.
Yeah, yeah.
Well, makes sense. Yeah. Before we jump forward, I wanted to return to policymakers a little more because there are a few curious questions that I had regarding them. Maybe you know some misconceptions that they have about like on-chain transparency in general, and also maybe they are obsessed about something that doesn't really matter in real investigations.
In general, I would say there is still a huge difference between what actual hands-on experts in cyber police know about crypto, and because normally they take any educational course they can, and they are very, very professional. Um, and what a legislator may know, because they not necessarily have any sort of hands-on experience with crypto. I think one of the things the that was the sort of a theme for this year was DeFi. Because if you remember the start of the year, the theme was that, I mean, it's actually like written, like MiCA can be interpreted like that. That if DeFi protocol has a known founder and a known sort of website, and someone owns the domain, and someone receives a commission from the smart contract, that means it's a sort of exchange. There's nothing different from a centralized exchange like Binance or Coinbase. And therefore, all MiCA rules should apply in terms of KYC and AML for DeFi as well. But crypto exchange can ultimately freeze internal transactions, like it can forbid you from exchanging your funds to, I don't know, USDT to Bitcoin and things like that. And it can forbid withdrawals, basically stopping you from taking money out if, I don't know, a court ordered that. In DeFi, all of these three things, deposit, exchange, and withdrawal, is one unrejectable transaction that is not even controlled in any sense or by the smart contract operator, like by the person who wrote the code. It's control. I mean, the actual approval of the transaction happens in a random miner computer somewhere, maybe, I don't know, in Vietnam, or today it's Vietnam, tomorrow it's Brazil. So this understanding, and there's nitty-gritty technical details to it that has to be explained, so the regulations will not have these misconceptions of how DeFi really works. So this was the theme. I mean, many regulators, they had these sort of requests for consultations and meetings in terms of how do we even regulate DeFi, or what is DeFi, in a sense.
Wrapping up 2025, like in general, was there anything that changed how you think about crypto crime, or it's more or less the same theme throughout the last years?
The money laundering methods improved
Mm.
in a sense. For us, it's a game of shield and sword all the time, especially when we investigate some of these hacks. It became increasingly hard to fight professional actors, even if you have very professional police on your side. And these hackers became faster, more cautious. They do less mistakes. They definitely do more different types of mixing, including cross-chain. So this is what became very, very complicated for police departments and for victims.
We speak here a lot about like adoption in general because, well, that's like mass adoption is the thing in crypto for forever, I guess. And now we kind of start to see it, I would say, because more and more people pay and like get used to the whole UX thing and all that. Maybe you can mention something that looked like adoption on chain, but actually created a huge compliance problem in disguise.
Look, I think just in general, adoption of crypto for sanction evasion, that's probably the biggest problem. Interestingly, it's not only these industries, most of the industries that get unbanked, and definitely the sanctioned entity get unbanked very quickly, they turn to crypto. But there are also other categories. Uh, I don't know, maybe from the recent one. Um, I mean, we can cut it in the post if that's too funny, but we found 11,000 escort girls in Dubai that accept crypto, which is crazy. Uh,
I'm I'm kind of surprised. I thought it would be more.
oh yeah, maybe I mean I don't know. Like there is adoption where you may not expect it. So escort girls, um, donations on any war.
What is harder today for you, like stopping criminals or not punishing normal users?
I don't know. Like we don't punish and we don't stop. That's the thing. We are more like an analytics company where we just flag things and we tell what the risks are, right? The actual people who punish or stop is the courts or the police. Uh, Now it actually both things became a bit easier because courts and police became more interested in crypto, more educated in it, and they trust arguments of analytics companies more, and they understand that where the information can be verified, how it can be verified. They generally understand the model and methodologies and things like that. So now I'd say theoretically and methodologically, it is way easier to stop criminals, and it is way easier to even punish someone like to seize funds and things like that.
Thank you. Let's look from a perspective, like from a more practical perspective, I guess. Um, like if you were designing the ideal like KYT setup for a payment operator like us, I think you've seen like a lot of companies. Like, what would you do like in a simplest format? Say, what would you automate? What would you leave human?
Well, that's a super question, and thank you for that. I would I would generally give you our product manager and a CSM in order to learn everything that is annoying to you. Like everything that annoys your analyst, everything that annoys your compliance officers and supervisors, and also everything that annoys your regulator and everything that annoys your customer. We would be writing all these things into three tables. And then we would use the current functionality of the tool to basically tackle these things. The simplest thing is, um, I'll tell you a very simple thing. Let's say sometimes it take a very long time to unlock funds if it was a false positive. So you did your analytics, you talk to a customer, and it seems everything is fine. But sometimes I don't know, like your internal setup, but sometimes it's just different departments who are talking to the customer and who can push the button and unlock the funds to be used. And these things could be done with our API as well. So if you have a case and case is solved, then you have the API and it unlocks the funds and it goes, and it's all become very fast, and you don't have a few another emails and integrations and stuff for that. Also, sometimes it is very hard. Like one of the things that are very interesting, like compliance officers, they are. This is what we learned with other setups like that, right? So no one knows the thresholds, right? The thresholds like 1,000 or 15,000, they're written in regulations. But how much over sort of high risk funds can you generally accept? Is it 1%? Is it 2%? Or like if you have a transaction of $1,000, but then there's $1 coming from a hack, is it already alert? Is it not? So, and also, if I would do this threshold, how much liquidity would I lose, or how much more customers would I block? That's back into your question. What is harder, not to block good customers or, catch the criminals? Sometimes it's coming to the question, what's my threshold? And we have, for example, a tool that we could use with your team to test different rules and different scoring profiles and different thresholds to understand. Like it's literally very simple. You just put transactions and you say use these rules to check, and it tells you this is how many transactions you would have blocked. This is how much liquidity you would have affected, and things like that. Be your own bank, be your own compliance as well, be your own security department.
Freedom sounds nice until you realize that you're also the police. You're not only sitting in the club, you're also the bouncer.
But you know what's biggest problem with these crypto payments with cards? There's still fiat in it.
One of the things that you in general talk about, I know, is explainable scoring. And I had a question here, like what should a customer see when we slow down or block something? Just a score, the reason, the evidence trail, and of course on the other side of it, where's the line of transparency where we start teaching the criminals?
The thing is, the regulations that are coming from TradFi and the practices that are coming from TradFi, there's a thing called tipping, right? So when you explain too much to the customer why you have blocked them, if you explain too much, and for some of the entities, if you explain anything, that means tipping, and this is bad. This is regulators, they don't like it, and they might have hard conversations with you about that. However, the blockchain is the tipping in a sense, right? So even without specific tools, the customer may still try to understand why he got blocked. He might go into tools with public information, even just the blockchain explorer with some labels like Etherscan. It may not have all the labels, but it has some. And the customer may still do their own research and understand why they got blocked, especially if the customer really don't know why they got blocked. I mean, if they know, normally they don't even ask the questions or things like that. Given the publicity of the blockchain, the kind of there is a self-tipping opportunity for the customer, right? So you probably don't need to teach them a lot, and you probably don't need to give them a lot of reasons. You probably can, what you can do by law, right, is to ask them information about specific transactions to do your own due diligence, but not really teaching them. And if they would want to know, they would know. I mean, there are even tools that are focused on like personal compliance, I would say. And this is like, I think in crypto we say be your own bank. That probably means be your own compliance as well, be your own security department, and so responsibility is not only for your own private keys, but for your own source of funds is here as well.
Freedom sounds nice until you realize that you're also the police. Not you're not only sitting in the club, you're also the bouncer.
Yeah. And what we see interestingly, like the industry itself evolves into, especially these crypto to cash exchanges, they try to use some sort of tools to understand the risks, even though they might operate without a license at all. They just don't want to get their money blocked, or they don't want their phones ringed from a three-letter agency after that, right? So that's why they care about that themselves.
Next thing I wanted to talk about is UX. It's like personally for me, it's an important topic, I would say, because just changing a simple thing in UX may actually break a full payment flow or remove friction at all. And it seems like compliance in general that is being introduced is kind of adding friction.
But you pay money to cut your own customers.
Yeah, it's this thing that is one of the. It's almost like this. It was specified in my questions, basically. Like, how do you reduce friction for normal users without making crime frictionless?
The first thing is a proper methodologies that you use. You have to be sure if you, for example, raise a flag for the compliance officer. That's why we don't use some sort of averaging mechanics. We don't try to um, raise the flag where we're not sure. We only raise the flag where we can go into court with that. So when we are so sure and we have the proofs and we have the screenshots from that darknet marketplace and we know that this wallet is associated with that, that's only where you get that sort of flag. And in this case, the number of false positives is pretty low. It's only when the false positive is almost a user fault. So the user may have paid with his cleanest money ever, received a salary for work in heaven, and paid all the taxes on it and all of that. And then they suddenly bought Bitcoin around the corner, and that Bitcoin was from a hack. So this would be the false positive you probably will be dealing with if you work with GL. But in the sense of, if we say the money on that wallet is coming from a hack, we definitely know what the hack is, and we know what the incident. We know, that there is a proof in our database that this wallet is associated with that incident and things like that. So, and with that assurance, you get less friction and you get more friction for the crime. We saw there were some tools on the market that would say, we have 5 scoring formulas, and the average of these 5 scoring formulas is this one, and then you don't know what the right answer is, like which of these 5 scoring formulas is correct. Like what are the methodologies of searching for the source of funds is correct. Like if you have 7, why would you have 7? Just give me one that is correct. Like it's that simple.
Your idea of averages is very clear. It's like taking an average of temperature from multiple patients basically tells you nothing.
Oh my gosh. Yeah, that would work.
Let's move to global compliance, and this is actually quite interesting topic. Before we move to EU and MiCA, just wanted to speak about like stable coins being global by nature, but compliance being local. What is like the most common cross-border mismatch that you see in real investigations?
Most annoying cross-border mismatch that we see in investigations is the fact that some jurisdictions and some entities in those jurisdictions just do not collaborate. So you might have jurisdictions where entities would be very comfortable to provide service without KYC for very large amounts of uh, funds and transactions, and the regulator be comfortable with that. And if you ever need to stop money on those entities, it will be very hard, or so slow the money would be already out when you will have a chance to do something about it. This is the biggest problem, and we now see a lot of political pressure on those jurisdictions from some of the jurisdictions they depend on, I think, to be a bit more collaborative in that sense.
If you had to define like a bare minimum global standard for stablecoin payments that would work across all jurisdictions, what would it like be, in your opinion?
I think you should definitely block sanctions. So you should check transaction for source of funds at least. Like maybe use of funds is already like it is very important to understand like that you're not sending money to terrorists. Yes, but this is just a way less risk in some jurisdictions. In if you, I don't know, in South America, for example, the risk is lower than if you are in Middle East. But if you check source of funds and you check sanctions and you check darknet and you check very dark stuff like child abuse materials or human trafficking and all sorts of these things, this will remove the risk of you having very hard conversations with your regulators. The rest is what your license require um, and what your regulations are care about, or what your regulators are care about.
This is what I was actually speaking about because even though all countries kind of decide to regulate, they took very different approaches, and some still didn't do any movements. So, do you think we'll end up with like global convergence of this regulation, or we'll see permanent fragmentation, and there will be like translation layers basically between those regulations and jurisdictions of different risk level, I would say.
Yeah, you gotta see, you gotta see when there's a panel of guys from America, especially from regulatory bodies, and there are guys from Europe and regulatory bodies. The vocabulary is very different normally. You know, even things in Europe, if you think about how some regulations were adopted by different countries, right? The vocabulary, the taxonomy is different. You know, the coin and token and currency and things like that, they all have very different meaning. There will be probably a level of harmonization of that. And generally, I think people can get along on, okay, is it a VASP or CASP? Doesn't matter probably, you know. And it doesn't really prevent you from working together. Like it doesn't matter you're VASP or CASP or you're doing tokens or coins. It doesn't really create any barrier for all these countries to do international trade as stable coins.
So you don't really see that this would be like a big fragmentation problem in the future, meaning from the regulatory perspective, not from the technical perspective.
The thing is, if you think about regulations, what people think about regulations in sometimes is this something that forbids, that stops, that prevents, that
Dragon.
creates barriers. Yeah, something very scary. Where if you read MiCA, it's a vocabulary, you know. It's like what is VASP, what is GASP, what is token, what is coin, what are the types of coins. The large chunk of that is basically definitions and categorization of what was not categorized. So it can be put into the traditional legal system and can be connected to that. And the actual part, like what you should do and what you shouldn't do, is a very small part of that. And things that kind of make sense, right? You shouldn't accept money from bad guys. You should check it, and you should hold records. If police will come and they will know the IP address of bad guys, you will tell them.
Mhm.
You will feed the dragon. That's it, right? So it's a very big vocabulary with a very little action list, and this action list is generally the same because it's all based on FATF guidelines.
If we started speaking about MiCA that much, let's I guess switch to it at full speed. By the way, curious thing, like the for some reason, like Europeans always say MiCA, but guys from US say MiCA, and it's basically on how they spell it. You can where the person is coming from. I wanted to play this game with you, kind of to challenge MiCA in a way, because MiCA and Travel Rule, I think there are definitely movements in the right direction, but there are things that could be changed, I guess. So if you could change one thing to make it work better, what would you change?
I would change the marketing of that, you know, because I'm not a legal person, and I don't want to be honest, I don't want to challenge the regulator. I think they are the experts more than I am in that sense. But I would definitely change how this legislation was presented. Not like a dragon, you know, more like a service, more what it allows you to do, more what sort of things that you can now do if you get that license, than what you have to comply with, you know. So if you change the marketing in that way, I think it will just maybe even attract new people in the industry, maybe new investors in the industry. Because a lot of people that speak about MiCA, they don't really know what's inside MiCA. They just think, oh, there's a bunch of rules I need to comply. There's no way I can get a license. It will be very hard. Um, and yeah, this prevents people from even registering companies in Europe in some sense, you know. But if you market in a way, you know, what you can do with it, that may change the whole perception game, and that may change how people really. And also, I would probably just simplify the process of application, get a license, and also maybe even simplify for some categories of companies. I would simplify the price for that, like maybe some sandboxes, maybe some startups, because it raises the bar a little high. You know, maybe I would create some you know, little fantasy, but I would create some sandboxes where, you know, let's say if you qualify, then you get a license just like that, and you can operate, but in some limited way or with some limited volume and stuff like that. That would be pretty cool.
Speaking of future, I think we can move to the final part of our conversation regarding our future, as I guess from the operator's perspective and future in general of the industry. I guess I'll try to take a free consultation from you. Like if you were designing a compliance intelligence roadmap for 2026 for a payment operator, like what would be the upgrades, like tooling, people, policies, partnerships, like key things. You don't have to go like in depth.
Yeah, I would start from just generally doing a workshop on that. To be honest, what we did with customers, and we also did that inside because we tried to make a product that will fit the process. And the way we did the general workshop was that we mapped the process, and then we tried to understand what's sort of annoying at every stage of the process. Let's say here only one person can approve all these things. Here we only have one supervisor and we have that many tickets to that. Or the ticketing system is not integrated with anything. Or you know, the unlocks case that we were discussing. So I would just start with the workshop, and that would be the first sort of purchase I would do. You know, is it a purchase? Is it the internal person doing that workshop, or is it a external person? But that would be the first thing I would do. The second thing I would do the self audit. So I would understand what kind of things we are missing out. You know, what kind of things? Maybe we have problem with sanctioned funds. Maybe we have problem with a lot of hacks. Maybe we have problem with that. So I would try to understand what things we missed out. What sort of questions we've got from the regulator. What sort of suspicious activity reports we had the most. I would try to avoid the survivalist problem or something like that, when you only think about things that you experienced. Um, so I would audit that, and based on these things, like whenever we need more sanctioned funds detection, whenever we need more pattern detection, we need more cross-chain detection, or we just need all of that and very fast, I would define what sort of tools and upgrades I would want.
I know that you are using AI within your systems for monitoring. Just wanted to maybe you can briefly tell me a few things that it's good for specifically in your products or services.
Yeah, so the first thing is just sheer prioritization, um, especially when you guys have a lot of volume of transactions. It is very hard to understand which one you have to analyze first. I mean, you can say, oh, that's the biggest one, but maybe the biggest one may carry just the lowest risk. Maybe some of them may be a bit more urgent. Some of them might be just a $5 risk on a million transaction or something like that. So we have a prioritization engine, and this one is just allows you by multiple parameters to get the most important things done first. That's a very important thing, especially if the volume is kind of big. And the second thing is just explain me what happened. In many situations, you know, when you see these crazy visualizations or when you see these reports with risk score and different sources and things like that, sometimes it's very important to just get a story. Like sometimes you encounter Garantex for the first time. and you don't know that it's a Russian exchange, and you don't know that they're sanctioned, and you don't know when, and you don't know that they already sort of their servers already seized by law enforcement. So you need to know that story. You need to know the context. So the provision of that context is very important. So, and we created, I think it's is one of the best systems on the market that would create that context for you to understand the report. Because the report normally just says, yeah, 50% money coming from the context, the risk score is 100. But what's the story? I mean, some people don't know. Maybe they know maybe like 50 names in the industry, but if it's some a lot of people don't know what BitConnect was, for example. You know, we know the memes, but for newcomers in the industry, especially those who are coming from TradFi, BitConnect is just what is this? This is a social network or what is this? So having that context and having that in a story form is very important to understand the reports and the risk score behind them.
What's one unobvious insight about where we're headed in 2026 that people are missing?
I think actually the international trade is what people are missing. It's because this is not something everyone can participate in. You know, in a sense, many people are missing it because they don't see the way they can make money out of that, and especially given the fact that it's mostly about stable coins. So it's not that easy to set up an export import company than even in a sense like to set up a DeFi protocol, you can do it from your basement, but the export import company is a bit harder than that. Um, but also the tokenization, especially tokenization of real world assets. Again, this is not something you can easily do from your own basement. You probably need to go and talk to owners of these real world assets in some way. But this is something that could be huge. I mean, we we've seen a lot of ideas from tokenization of real estate and tokenization of stocks, tokenization of land, tokenization of different businesses, tokenization of data centers now already. So this one is something that people still cannot feel. They don't see these tokens at exchanges, and probably there will be some barriers. If you remember, a couple of years ago, there was that trend on security tokens, and it just didn't took off because there were no regulations and infrastructure for that. Now I think given the level of licenses some of the crypto companies have and things like that, tokenization has way bigger chance to take off and become a real thing. Oh no, one more thing. This one is just specifically for you. I think this is about actual payments. Like
Okay.
now we have a lot of crypto cards, but you
Mm-hmm.
know what's biggest problem with these crypto payments with cards is that
Tell me.
there's still fiat in it.
Of course.
And with that, you cannot really compete with fiat because in your crypto transaction, there is also a fiat transaction. The percentages on these cards are crazy. It could be like 1.5% per transaction, maybe even 2 or 3%. And I think one of the trends that could happen next year is when there's no fiat in the transaction, when the transaction is settled in stablecoins. And this could be a very big jump for the actual user experience for the end user.
And how is it different from just paying with stable coins with your wallet?
Well, to pay with stablecoins with your wallet, you need to like enter the wallet, and it's not like just tap and pay. Where with a card is much more convenient. It's tap and pay. It's like your Google Wallet, Apple Wallet, and people got used to top up cards and pay basically in stable coins that will be converted into crypto. From the UX perspective, that doesn't change. That wouldn't change a lot, but from the commission perspective, that will change a lot. And now you'd better stay with your fiat card and pay because the commission is way lower, and you probably can even get a cashback. Where with crypto, you'll be paying 1, 2, 3%. Where in future, stablecoin payment with settlement in stablecoin will make crypto payments actually cheaper than fiat payments.
That looks like bright future for us.
Yes.
Thank you for that.